Most people in the world have heard of Google, and a lot of those people probably consider Google to be a pretty good company, but I do believe that Google is such a good company that they will be the first one to reach a $5 trillion market cap. I'm going to be covering 7 core reasons that I believe will power Google to reach that $5 trillion market cap first before any other company. So without further ado, let's get right into it. So first of all is the potential that YouTube has. Now, YouTube is becoming one of, if not the number one, online media and entertainment platform in the world, and is continuing to grow at an extremely fast rate. Now, YouTube revenue grew a whopping 45.9% in 2021, and this was higher than the 30% growth that was achieved in 2020. So as entertainment consumption continues to shift from cable TV to online platforms, YouTube continues to gain more and more users who they can monetize through their various fantastic monetization methods, with the main one being advertisements. I believe that YouTube has a major advantage over other digital content platforms, and this is the fact that they don't need to actually fund content themselves. So other platforms like Netflix, Disney, Amazon Video, etc. all need to constantly fund new content, and they need to fund this content themselves in order to keep the platform fresh and to keep paying customers happy with things to watch. Now, YouTube, on the other hand, can rely completely on millions of creators on the platform to keep putting out content every day, and it is a relatively self-sufficient content machine that YouTube have going on, and I believe that this is a fantastic business model to thrive in the future. Now, the second core reason is the cloud growth that Google have. So Google continue to be a major player in the fast-growing cloud industry, and although they are still a way off Amazon's AWS, their market share is growing every year, eroding market share away from others. The current top player, Amazon, do have a 33% market share, roughly about that, followed by Microsoft at approximately 22%, and then Google are in third with approximately 10%. Now, although Amazon still hold a significant lead, their current market share has stagnated between 2017 and 2021, while Google, on the other hand, have increased their market share from 5% to 10%, which is a very positive sign, in my opinion, that their cloud platform is growing and gaining market share. Google Cloud revenue growth has compounded at 47% between 2017 and 2021, and as of 2021, their yearly cloud revenue reached $19.2 billion. The cloud market is growing in general very fast right now, and spending on cloud infrastructure reached $178 billion in 2021, an increase of 37% compared to the $130 billion that was spent in 2020. And by 2030, this is expected to increase to $1.55 trillion, meaning that if Google can maintain their 10% market share, then this would equate to $155 billion in yearly revenue just from Google's cloud segment. So next up we have Google search monopoly. So Google is the king of internet traffic and currently have a clear monopoly on the search engine space, a space that almost every person on the internet uses on a fairly regular basis, I would have thought. Google as a brand is a household name at this point, and that brand power alone gives them an extreme advantage in the search engine space. Google.com is the most visited website in the world, with 92.5 billion monthly visitors, which is a clear winner over number 2, which just so happens to be another Google-owned business, which is YouTube.com at 34.6 billion, and then number 3 is Facebook.com, which is at 25.5 billion. So the second largest search engine in terms of monthly visitors is Baidu.com, which I believe is a Chinese search engine. So that really does show the gap that Google.com has. And just in general, Google has a dominant monopoly on the search engine space and has a very strong moat, which would make it extremely hard for another company to come in and create a search engine that would rival Google.com. And in fact, many have tried in the past, such as Microsoft with Bing.com, but the head start that Google does have makes this extremely hard for another company to actually get on top of the Google.com dominance. Next is the network effect that Google does have right now. So Google's family of applications and services is incredible, to say the least, and spans so wide that once a user is in the Google ecosystem, it is not only easier for them to stay and use other Google services, but it's also very hard for them to actually leave. So Google Mail, Maps, Photos, Drive and Play are all Google services that have over 1 billion users at the moment. And on top of this, they have Android, which is obviously the phone operating system, which is also over 1 billion and is the most popular operating system on the planet right now. So if somebody does use Gmail for their main email address, then it often makes a lot more sense for them to use other Google services like Google Drive and Photos, rather than going to a third party to get these services. The only other company that I can think of, and what other people believe, could have a moat as wide as what Google has, is that of Apple with their products. And that really does show that Google is up there with the absolute best in terms of the moat that they have. So now we're moving on to the more speculative and exciting long-term potential aspects of Google's business that could power them to the 5 trillion market cap, and the first of which is self-driving cars. So Waymo is an autonomous driving technology company that is a subsidiary of Alphabet, the parent company of Google, and recently Waymo launched their commercial taxi business, which analysts at UBS do predict could bring in over $100 billion in revenue by 2030 even. So although Tesla is often the first company that many people think of when it comes to autonomous driving and robo-taxis, Waymo actually did have the highest number of miles driven in the year of 2021, with 2.3 million miles driven. So many people expect there to be a significant shift to autonomous driving in the future, and Google is therefore positioned very nicely to capitalize on this high growth sector with their Waymo business. And then next up we have the other bets that Google do have. So Google do have a number of exciting projects that they are working on that they don't even include as part of their core business, and they do categorize them as just other bets. So these bets may not do a lot for Google's bottom line right now, but they do have potential to be big winners in the future. So this does include Google Fiber, which will provide super speed internet, Calico, which is a science arm that they have funded with $1.5 billion so far, and they do aim to increase human lifespan with this business. And then also they have a venture capital arm, which is simply called GV at the moment. Google do have a lot of cash on their balance sheet as of right now, and this cash can be used for mergers and acquisitions. And an example of this is their recent $5.4 billion purchase of the cybersecurity company called Mandiant. Now, cybersecurity is a massively growing industry, and this acquisition of Mandiant could give Google the opportunity to integrate these cybersecurity features across their extremely wide range of services, and this could offer a lot of synergy with the current business models that Google do have for their services currently. And then the final point that I have here is that Google are in a good position to outpace inflation. So the current economic climate is fairly unprecedented right now, coming off the back of a global pandemic and also a conflict between Ukraine and Russia. A lot of money printing has taken place. Also supply chain problems are taking place as well. And all of this is leading to inflation being at very high levels right now. And it's coming in at around 8.5% in the US. And although nobody knows for sure what is going to happen in the future with inflation, it's fairly likely to stay quite high for a while. Now, Google do have fantastic fundamentals to deal with inflation, as they are in a very strong financial position. They have gross profit margins of over 50%. Their overall profit margin is over 25%. They have over $100 billion in cash on the balance sheet, and this also totals more than their total liabilities, which is good. And they also have a 3-year track record of increasing net income. So all of these do position Google in a great way to deal with this inflation. And in fact, Google did spend $50 billion on repurchasing their own shares in the year of 2021 and have consistently been using their cash to buy back existing shares, reducing the total number of outstanding shares every year. Now, Google have reduced their outstanding shares from 695 million to 660 million between 2017 and 2021, and this number is likely to only decrease at a faster rate over the next few years, making existing shares worth more in terms of equity in the company, which is obviously great for existing Google shareholders. So that is all for the video today. I really do believe that those 7 key reasons will power Google towards reaching that $5 trillion market cap before any other company does, and I truly do believe that they are the best, or at least one of the best companies in the overall marketplace right now. And personally, I do think the valuation is quite attractive. But I will say that obviously this video is just my own opinion. It is absolutely not financial advice. If you want financial advice, then go and see a certified and qualified financial advisor. This video is just for purely entertainment purposes only. And apart from that, guys, thanks a lot for watching. Leave a like if you enjoyed it. Subscribe if you want to see more finance and stock market videos. And see you in the next video.